Hey, what's up everyone? This is Silver Slayer. Thank you for tuning into this video. Right across the board, there is a pullback, a correction happening right now, and this video is going to be explaining why it's happening. But before we start, I want to say smash that like button, make sure you subscribe because I do post daily videos. So when markets are in the red, a lot of people panic sell or get in a panic-like state, and that's with a lot of emotional attachment to these markets. But please take a step back and remember, markets do recover, and that's actually healthy for prices to do this, or for the markets to do this. This is only an opportunity to buy more for cheaper. It's just like going to the store. If you see something on sale, isn't that a good thing? For some reason in the investing world, when things are on sale or cheaper, people get worried. But all it's going to happen is it's going to go back up. Right now, you just get to buy it for cheaper. So don't forget that. Now, we're going to go into why this is happening. So, the link to these two articles will be in the description. I have an article from Yahoo Finance and Seeking Alpha. So, silver retracts, falls below $18. Last week's dramatic events in the Middle East triggered sharp volatility in silver prices. On Wednesday, silver prices climbed 4.3% after Iran launched missile attacks on 2 U.S. military bases in Iraq. However, the Iranian attack appeared calculated to avoid U.S. casualties and caused minimal damage. Investors took this as a signal that Iran was ready to de-escalate the situation after saving face with an attack against U.S. forces. Silver prices responded by falling back below the $18 level, which has psychological significance. Now, which is interesting because they're bringing in the speculative aspect of this, that it is speculative. It is more off of opinion and how people perceive things as well. Silver rises after U.S. job numbers slip. The U.S. labor market has been a key pillar in the strong U.S. economy, but December employment numbers released on Friday were a major disappointment. Non-farm payrolls dropped sharply to 145,000 compared to 266,000 a month earlier. This missed the estimate of 162,000. Wage growth fell by 0.1% or to 2.9%. It's the lowest level since July 2018. Despite all the talk about a high or a tight labor market, weaker real wages will likely translate into reduced consumer spending, which could spell trouble for economic growth in 2020. So, the weak numbers weighed on investor risk appetite and boosted silver on Friday, which crossed above the symbolic $18 level. However, silver was unable to consolidate these gains and find itself again looking upwards towards the $18 line on Monday. So that's just talking about the jobs thing. Now here we're going to go into a little bit of why it pulled back as well. So the whole gist of this is to please do not be thinking about getting out of the market entirely. The weak hands are always the people that get in very fast but also exit really fast. And if you are going to sell, wait until the price at least goes back up. You're supposed to buy low, sell high. Most people actually buy high and sell low. You don't want to do that. You don't want to buy high when all the talk is about it. That's when you could be selling. That's when you can be capitalizing on some profits. Is when it's rallying. And then when it's low, you could buy it. Get into the market when it's cheap. Now I know not everyone had the opportunity to buy $15 silver because there's a lot of new people in the world of precious metals in these markets, but right now it's still extremely low. It's actually below $17, or it's around $17.90 right now. So it's definitely an opportunity to get in cheaper. So here's another article from Seeking Alpha. The link will be in the description. The soaring paper gold open interest on the COMEX is just one indication of a shortage developing in the physical gold bullion market. Now, I made a video a couple days ago going over the actual numbers. Production is down 27% for silver, and gold is somewhere around there as well. And this indicates that the supply is not being met by the demand, and what is going to in return, or going to escalate from that, is the people that need it. The industry side of the people that actually need it aren't going to be able to meet that, and they have to pay interest. They're actually paying premiums on silver right now, even for bullion, because there's a silver shortage and a gold shortage as well. It's no coincidence that just prior and accompanying the sell-off in gold this week, exchange for physical and privately negotiated transactions volume spiked up on the COMEX. EFPs and PNTs are derivative transactions which enable the bullion banks to settle futures with cash or some other form of gold derivatives like shares of GLD. So the soaring paper gold open interest on the COMEX is just one indication of a shortage developing in the physical gold bullion market. It's no coincidence that just prior accompanying the sell-off in gold week, the exchange for physical and privately negotiated ETS volume spiked in the COMEX. So there are other indicators as well, and this is something that they go on in the video. I'm not going to share this video, but it will be in the link or in the description. So we have a couple of different things to talk about. Now, the pullback is something that I really want to bring back in this video, because I know that there are a lot of new people in the world of precious metals, but I'm here to say that silver will go up and down. And actually, it's going to go up higher and down lower than gold because silver is more volatile. There's a lot of volatility in the silver markets compared to gold. And actually, if we're looking at the US-China trade war or the Iran tensions, silver, you could have profited more off of silver than gold. See, silver is gold's little brother, but that also entails that silver moves later. So if you want an idea on what silver is going to do, look at what gold's doing, and silver will follow suit within a couple weeks or a couple months. But for this pullback, it's healthy for a market to correct. This is actually healthy for silver to do this right now. You never want a market to just go up, up, up. That's a huge red sign or red flag that there's going to be a huge crash afterwards. See, what you want to happen is for it to go up and then a little bit down, and then go up and then correct a little down. There has to be dips, there has to be sell-offs. All that means is that people are capitalizing on some of these profits. But the thing is that when it's going down, people have this theory that and it's distorted, it's not true, it's false, that it's going to keep going lower and it's not going to stop. I want to reflect back to Bitcoin. When Bitcoin was $20,000, what happened? It shot up, it seemed like overnight, just to $20,000. Or when silver was $50 twice in the last 30 years. What happened was it went up, 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 but there was no room for it to correct or to normalize. So there was no stability being built. The stability has to be built upon these markets, and for silver to be stabilizing at this $18 range just gives it some momentum to go higher. And we even seen when stock markets were setting record-breaking highs, silver was still setting its feet in the dirt around that $18 level, which is extremely good. So that means that there is some support. When I go over my chart analysis, I might do it today or tomorrow, you guys will see this, but the support lines are being built higher and higher. See, instead of it going up or down, you want a gradual line to be appreciating upwards, slowly, gradually building momentum upwards, and that's where it can set in, and that is where prices can then rocket from. That's what's going to lead silver to $100 without pulling back. Every time silver hit $50, it retraced or retracted back so fast because it didn't have time to set in that storm. You know, that storm was brewing, but it died so quickly. We need it to be built. We need the foundation lines to be built, the support lines, resistance levels to be met. So anyways, I hope you guys enjoyed this video. Like I said, these two articles will be in the description. I always check the prices from JM Bullion because it shows a chart. Right now it shows that gold is at $1,552.57, down $11.92. There's actually, I'm pretty sure silver is below 17. I don't know if these are updated on a secondly basis, but it shows right here silver's $18.09, down 10 cents. Platinum's at $978. Down $2.56, and palladium is actually down $8.34, which has been the very bullish one. If we can go to this chart, palladium is actually, it was rising very high. Let's go to the 1 week. So yeah, so you could see right here it went from $1,850 to over $2,100. So there was a huge spike in that, but everything is down, and that is from some of the stuff we talked about in today's video. So anyways, I hope you guys did enjoy this video. If you did, make sure to smash that like button. Make sure you subscribe if you're new, because I do post daily videos. Hopefully I will be getting my other channel back soon. I'm still in contact with YouTube, so their internal team, so hopefully we can go back to the other channel, and I still will post videos on this channel in the meantime. And actually, when I get my other channel back, I'll probably still post on this channel, just because I am starting to really like this channel, and it feels good to be working on the second channel as well, where a lot of you guys are subscribed. So thank you guys so much for all the support. I appreciate it so much. This was Silver Slayer. I'll see you guys soon. Peace.